Okay, good afternoon. Welcome to this informative session about this credential, Certified Enterprise Risk Actuary. I will talk you just a few minutes just to introduce the session and the speakers that we will have. The Institute has us to be member of the CGA, which is the CERA Global Association. At this moment, we are acceding party. It's the first status that you have when you are applying for be member of this international association, and we have ongoing the award signatory status. It will reach quite in a very quite short time. I don't know if Henry will say anything about that, but probably in almost two months. So just here. The session will have two parts. The first one about the CERA credential, how to become a CERA, the European Actuarial Academy training, which is the core syllabus, the CERA modules, the 4 modules, and the CPD, which will be explained by Henning Bergen. And the second one is the CERA professionals. It's about how to create value for both companies and professionals that are certified CERA. And Kevin Henderson will introduce that. So we have already have the coffee and register, and for at least about 3/4 hours, Henning will spoke about the CERA credential, and Henning about the CERA professional. There will be every Q&A, question and answer that you want. Probably they will answer the questions before you ask, but just in case, do not hesitate, please, and ask for everything you want. And let's introduce Henning Bergen, is the General Manager of the European Actuarial Academy, and Kevin Henderson is Senior Consultant at Milliman. He is already accredited as CERA by the Institute and Faculty of Actuaries of the UK. When I spoke with Luca Inserra, who is the General Manager of Milliman, I asked him, I need a CERA. And he told me, oof, it's very difficult to find a CERA. I have to look all around the world. And it was one evening, and next morning he told me, I have a CERA in my team here in Spain. So when he told me that it was very difficult, he already had it, but he makes me to suffer just a little. And which is the European Actuarial Academy is the education provider of us for the CERA trainee. And as you have probably know, we have already scheduled 2 modules for this credential. The first one is the next month here in Madrid, and the second one is in September. Henning will explain that you can participate in every trainee all around Europe where they are doing their seminars. So, thanks for your attention, and also thanks to Milliman for support and sponsoring us. Okay, and
first of all, as Javier already mentioned, my name is Henning Bergen. Perhaps you know or you've heard it. I'm from Germany, qualified actuary in Germany. I'm working with the German Actuarial Association for almost 13 years now. Half of the time I'm doing our German business in education, CPD and examination. The other time I'm working with the European Actuarial Academy. I'll come back later to that. You already seen and heard that we will have a Q&A session afterwards, but if you have any questions, please feel free to ask. In between, perhaps it's easiest to just clear what's not unclear. And also sorry for not giving the talk in Spanish, but I think it would not be good for you, and even worse for me if I tried. So I'll stick with the English and hope you can understand me quite well. What I will talk about, first of all, I'll just give a short explanation about the European Actuarial Academy, what we are, what we do, and then come to the main part about the CERA, CERA, you can say both, credential, how it is organized, what's the content, how this combines together the European Actuarial Academy and the CERA credential, and then how the Instituto comes into play with the three parties working together to offer this credential to you and to all Spanish actuaries. Let's start with the European Actuarial Academy. The EAA was started in 2002 as an initiative. You see that in the second bullet point of the Actuarial Associations of Austria, Germany, Netherlands, and Switzerland. This explains why I, as a German actuary, work as managing director for the European Actuarial Academy. The EAA is organized from our office in Cologne, where also the German association sits. We have 2 people working more or less full-time for the EAA. Legally established as a German institution in 2005, and since then we do quite a lot. We offer permanent education from actuaries to actuaries in Europe. How we do that, I will come back to that later. We cooperate with several supranational organizations, the IAA, the AAE, IOPA, the CERA organization as well. And all you want to know about the European Actuarial Academy, you can find on our website, actuarial-academy.com. What we do, we offer CPD seminars, approximately 15 to 20 per year. You'll find a small information leaflet on your chair, what we do, how we do that. Normally, we offer 2-day courses on a specific topic, like IFRS 17, asset management, pensions, life, non-life pricing, reserving methods. Throughout the actuarial work, we have qualified experienced speakers. We have normally within the seminars a workshop kind, case study kind of thing to give you hands-on information how to deal with certain topics. As our participants not only come from the location we have the seminars in, but also from throughout Europe, we also have quite important a social event in between at the evening of the first day to get the people connected to build up your own network throughout Europe with the international group of attendees. Compared to that, or in contrast to that, we have different special activities, normally with an external partner like the IAA, like the AAE on the course syllabus. We had that a couple of years ago. For the first time this year, we will offer a fit and proper event where people in official roles within Solvency II will get a lot of information how to fulfill this criteria. We cooperate with supervisory authorities, having speakers from them, and also offering training sessions for local supervisors. We offer webinars within those special activities. And the third part of the activities we do is on CERA. We'll come back to that. This just as the advertisement block. Of course, I'll have to do that as well. What we did in 2017, at least the second half of the year, what we will do in the next month. And I was, well, quite happy to see that it's quite small, so we do a lot, but I hope you get the information, especially from our website. So that's about the EAA. Perhaps you've been to a seminar offered by us. If not, please do so in the near future. But I'm not here, well, not only to talk about the EAA, but more talk about the CERA credential and how it is organized on a global basis. Just to draw a wider picture, this is, I guess, not new. Over the last couple of years, I think what actuaries are doing has been changed and is still changing. You see increasing duties and responsibilities for actuaries, not only due to the Solvency II framework. I think IFRS 17 is a major topic coming up in the next couple of years. So there's a lot of things to do and a lot of new things to do. Actuaries have quite some involvement in modeling risks for insurance companies, for pensions, different parts of the industries. And of course, this has some involvement. The crisis a couple of years ago made some movements, and this all comes to one picture, especially within Solvency II in Pillar 1, with advanced requirements due to actuarial techniques, how to rate, how to value certain parts, and also within Pillar 2, where it comes to risk management framework. And this is more or less where CERA is aiming at. And on the one hand, coming back to Pillar 1 and Pillar 2, actuaries are still, of course, technical experts, especially when it comes to risk management. We have a financial background, we have a mathematical background at aiming at those different tasks. But still, and I say it again, within Solvency II, actuaries can also be risk managers, can be responsible risk managers, and they are in different jurisdictions, in different countries. And as I said this is where the CERA initiative is aiming at, to bring together the mathematical background, the risk background, the economic background, and brings it into one thing. And this is more or less, from today's viewpoint, the motivation several actuarial associations had in mind when they, in November 2009, formed or launched the CERA credential as a global risk management designation for actuaries. So you all know, with your membership in the local actuarial association, you can call yourself an actuary. This is in Spain, this goes for France, the UK, for Germany. This is quite the same. Also within Europe, this is quite special. You have the mutual recognition agreement, so if you qualify in Spain as an actuary, you can go to France, you can go to Italy, you can go to Scandinavia and call yourself an actuary there as well. That's the agreement between European associations. This does not hold for countries outside of Europe, so if you as a Spanish actuary or myself as a German actuary go to the US, we cannot call ourselves an actuary. This is different. Having that in mind, back in 2009, the 14 associations sat around the table and said, well, there's quite some development within risk management. We want to put actuaries into the front seat within risk management development, and we want to give our actuaries the tools to work as risk managers within insurance, within pensions, but also outside of the traditional areas. And this is when they said, we want to put this into a formal framework, found a global association of actuarial associations. Xavier mentioned that earlier, the CGA, CERA Global Association, as the administrative body. And back then they said we want to pursue 4 goals: strengthen the international recognition of the actuarial profession within enterprise risk management, promote the development of more actuaries in risk management, present new opportunities for an actuary as a person. So if an actuary wants to move into new areas to work in, he can do that, or she can do that with the CERA. And also, as the last point, and I think this will link to Kevin's talk later on, send a strong message to employees and candidates that actuaries can work within risk management. And this also some kind of advertisement towards CERA, what they say about themselves. CERA, or CERA, I think CERA is more easy for me to say, so I'll stick to that. What's so special about that? They have their own core syllabus, which means it more or less does not care where you do the qualification, as they all have the same agreement on the contents of the CERA qualification. So if you go to the US, if you go to the UK, if you do it through the European Actuarial Academy, there's a certain set of content that everyone teaches and examines. So this makes it comparable and transferable throughout the world. This is based on the education course syllabus for the Worldwide International Actuarial Association. So you need to be a qualified actuary to start the CERA training. You do not start from zero. You have a very profound qualification as an actuary, and this makes CERA quite special compared to other risk management credentials like GARP, Premier, or whatever, as this already starts after being an actuary. The CERA qualification can be offered by full member associations. This goes in line with the first bullet point. When an association is a fully actuarial qualification or offers a fully actuarial qualification, the CERA sets on top of that. Also, this goes to employees as well. As a CERA, you need to have a code of conduct, which more or less defines how actuaries work, what they can do and what they cannot do. CERA requires continuous professional development. And the last point is more or less an information for experienced people within the enterprise risk management area. It gives the opportunity for associations to say, well, we set up the examination pathway to become a CERA, but we can also say to experienced people who perhaps will not participate in exams that the association is also available or has the availability to offer CERA to people on a different route. So, spoken a bit about the education syllabus and what people need to learn and to be tested in. This is the CERA ERM syllabus with the headlines: Enterprise Risk Management Concept and Framework. Just to enter, what is ERM, how does it work, how there are different frameworks in it. ERM process, structure of ERM function and best practices, risk categories and identification, risk modeling and aggregation of risks, risk measures, risk management tools and techniques, and economic capital. I think as actuaries, some of those points you know, perhaps in some of those areas you already do work, like risk modeling or risk measures. That's not completely new to actuaries, but within the economic risk management framework, that's where this is special and where it puts a lot into it. So this is what's set in the international framework that every qualification to become CERA has to fulfill. There are, of course, not only those 7 areas, but there are a lot of topics beneath that. And I could fill like 20 pages with all those points, but you can have a look at the CERA website where this is in more detail. So back in 2009, the different associations started to set up their education scheme based on this. So did we, the European Actuarial Academy. And in doing so, I'll perhaps stay a bit longer on this slide. Back in 2009, the German association was part of the CERA development as well. We set up our own education program for our members. But as CERA aims to be a globally recognized and globally present credential, they said, well, of course, associations can set up their own education system, like you have your own actuarial education system here in Spain. But we want to make it transferable. Perhaps several associations cooperate in offering CERA, which gives the CERA credential a better way forward to reach all actuaries throughout the world. This is stated in the first part. Actuarial associations can delegate an educational program and a suitable examination process to a so-called accredited education provider. So you can say to whoever you find suitable, we want to offer CERA and we ask you to do that for us, especially if you are, well, not that well aware if there are many people who can do that, or if you want to work together with others who already did that. And having this in mind, the European Actuarial Academy said, we are an accredited education provider for the 4 associations mentioned earlier. We want to offer it to other associations in English so that more or less everyone can take part in it. And we want to do that for European associations as we are based in Europe and offer it on a continental basis. So this means the EAA acts as education provider for local associations. This also means if you take the CERA courses and gain the CERA credential, you will not get it from the EAA, but from the Instituto, as the Instituto and the EAA cooperate in offering the courses and the exams. I mentioned that already earlier. Basis of EAA's education program for CERA is the already accredited system of the German Actuarial Association and our academy, which is a combination of courses and exams. The ERM syllabus with the 7 areas was transferred into 4 modules. So the words you saw earlier you'll find also in here. Foundations and quantitative methods of ERM, taxonomy, modeling and mitigation of risks, ERM processes and economic capital. That's what we, as the German Association, made out of the ERM curriculum. We said we want to offer it to as many actuaries as possible, so we start after the fully qualified actuary, after the IAA syllabus. We have put the whole content into 13 days of training for the 4 modules. We want to have a very high practical relevance in it, so there is a combination of professors who give the theoretical background in teaching the contents, and we have a lot of practitioners from insurance companies, from financial institutions, from consultants, putting in the practical relevance to it. I'll come back to that later. The program is designed to take 1.5 years. Xavier already mentioned we start with the first course in February, the exam will be in May, then the next one will be in autumn, and the last 2 will be next spring, so 1.5 years run. So that was a lot of talk around it. I just want to give you some insights of what will happen within the modules. Starting with the first one, Foundations and Quantitative Methods of ERM. It's a seminar of 4 days. The examination will be 180 minutes. We're currently already in talks about offering the exams in Madrid, right? I think this will work out, so you can participate without that much of traveling. Date will be 20 to 23rd of February here in Madrid, and we will offer the seminar on Module 1 once a year in spring. Last year it was in Vienna, the year before it was in Zagreb, the year before that it was in Germany, so we just try to travel around Europe to offer it to all the associations cooperating with us. The topics, you see the list, a combination of the ERM framework, concept of ERM, what's ERM aiming at, why do companies do that, why do they have to do that, and what are different approaches to do it. Some principal terms, ERM culture, communication, monitoring, governance, and just a short look into how ERM helps creating value for the company. Then there's a switch over to the quantitative methods, the mathematics behind it, risk measures, statistics, interest rate risk, credit risk. Here there's the mathematical foundation, which is the basis for what's going to happen in the later modules. Just to give you some insights, I hope it's not too small. Couple of slides from the presentations. It's a couple of 100 slides, and the slides from the seminars give you all the material you need to have to pass the exams. So there's no additional books you need to buy, no additional material you need to get. all what's needed and all what's within the ERM syllabus is on the slides. And so you have that to prepare for the exam. And together with that, you can find on our website the examinations from the last couple of years to give you some support to prepare yourself for the examination. So this package of material from the seminar plus older exams gives you all the aid, all you need to pass the exam. You can see quite clear the two parts of the seminar, the mathematical part, pricing of equity on the one side, and the organizational framework, lines of defense, which is, of course, part of ERM concept. Jumping to the next one, also can be seen as more or less the theoretical basis, the completion of the theoretical basis for our CERA courses, taxonomy, modeling, and mitigation of risks. This has a 5 days seminar, will take place in mid of September, also in Madrid, and will also be repeated every year in autumn. The examination is in October, a couple of weeks later, with a duration of 180 minutes. You see there quite a long list. If we're talking about taxonomy and modeling of risks, there are different kinds of risks. Strategic risk, reputational, liquidity, operational, market risk, property, currency, etc. Some insurance-specific risk, underwriting risk, property and casualty, life and health, how they can be transferred, how they are concentrated and aggregated. This is what is happening within this course. Also, of course, on a theoretical basis to show how this can be done, how this can be modeled, which will then be, of course, part of the seminar and also part of the examination. You can see examples of strategic risks on the left-hand side, risk scenarios on the right-hand side. Also, this course has quite a lot of material. Of course, for 5 days, it has something like 700 to 800 slides, which again offer you the whole package to prepare for the exam. Again, a short look into the exam from last year. So we already have 9 days of training. It's not that much until 13. The last 2 modules, they are shorter as they have a different scope than the other 2. I mentioned earlier that we try to aim or try to be as practical orientated as possible. This is what happens in the next module, ERM processes. You see the topics again. This will take place in spring 2019, and the last cycle took place in Vienna. So this year's seminar is in Vienna, mid of March. Risk exposure, risk profile, risk management system, limit systems, risk communication. Coming back to what was introduced in Module A, building up on this, risk management control cycle, and around this, limit system, risk management system, communication, we have a quite long case study for a non-life insurer. We are using a virtual non-life insurance company that was built up by the German Actuarial Association. We use this virtual company to do a lot of theoretical actuarial work when we want to use pricing, reserving methods for non-life companies. We use this company to present some of our findings. There you can see risk profile, benefits from risk management, as well as a case study approach within the examination. Of course, today's seminar, it's a bit shorter, but almost half of the time is focused on the case study and how this is applied within a non-life insurance company. Completing the cycle, module D, economic capital. Again, 2 days. To make the participation easier, we have them in one row. So module C is the 2 days before that. Then module D starts directly. So you have, again, 4 days of training in one row. Economic measures of value, economic capital assessment, capital modeling and allocation. And here the case study is built on a life insurance company to have the comparison in between, how that differs. And of course, economic valuation is quite interesting in life insurance. Of course, it's also quite interesting in non-life insurance, but still we wanted to make a differentiation between the two models with the high practical part and the different case studies, non-life and life. Again, look into it. Definition of economic valuation, profit sharing, and how it has an influence into risk management. Again, examination is available, as are some quite comprehensive descriptions on what is happening within the seminars. So if you want to have more information on what's happening within the seminars, just have a look at our website of the European Actuarial Academy. There you find quite some longer announcement for the seminars. So if you're interested, perhaps not only participating in the whole CERA program, but to take part in one or two of those modules just for your own continuous professional development, you of course can do that. Seminars are open for everyone, not only for the ones participating and doing the exams, but also for CPD reasons. Of course, I have to show you and want to show you what the costs are. We offer the seminars with quite experienced speakers. So this, with the 13 days of training and the examination costs, this adds up to what the whole CERA package is about. Last but not least, any questions on the content? I'm happy to answer them if you have any. I'll be here later on as well, so of course you can ask later on as well. Cooperation between the European Actuarial Academy and the national associations, I already tackled that a bit. The Academy offer seminars and the exams. The exams are officially done by the German association. As the German association is part of the CERA Global Association, we do offer the exams and the preparation is done by the EAA. Every module, mentioned that earlier, takes place once a year at a different location. The cycle starting in 2018 will happen here in Spain together with the Instituto. I mentioned the EAA can be installed as education provider, which is going to happen. And Xavier already mentioned that the CERA association is quite strict with the process who is agreed as award signatory. So this takes a couple of weeks, couple of months. They look into the slides, they look into the exams. We are reviewed every year, so this is quite a lot of work that needs to be done to stay in this award signatory status. And by using some external education provider, this goes to the education provider. And of course the EAA is very interested in maintaining and retaining this status, as we offer the CERA qualification to those associations. You see quite a long list, starting from Austria, going down to Switzerland. In some other presentation, I do have a map of Europe with blue for the countries using the EAA, so there's quite a lot of blue in continental Europe for the associations using the EAA. This is more or less my last slide. I made it quite easy for myself and just copied that from the CERA organization, what they want to achieve, what they are trying. They want to provide the most comprehensive and rigorous training in EIM. They grow quite fast throughout the world. We have over 4,000 CERA, so quite a lot of in the US, a lot in the UK, over 200 in Germany, and I hope we will be able to welcome the first Spanish CERA in 1.5 years. It equips risk management professionals with a credential, a title, a globally recognized title. It gives, and this is quite interesting for actuaries in well-developed markets. It gives help for actuaries move out of the traditional fields into banking. There's a South African CERA doing building risk management for skyscrapers. There are people in CERA working for airlines and modeling their pricing tools. So CERAs work in different areas. This is what is quite interesting for the US, for Australians, for South Africa as well. And of course, it's also quite interesting for companies, for employees, for consultants, as this is recognized more or less throughout the world. It of course helps those people to move into different areas of the world and work there as a CERA. So, thank you very much for your attention. If you have any questions, please feel free to ask. If those questions come up at a later time, you're always welcome, and I'm happy to receive emails. But before I finish, I mentioned earlier that I'm from Germany, I'm located in Germany, I'm a member of the German Association, and perhaps you have heard, and this is something completely else, also in an advertisement blog. Every 4 years, perhaps you've heard that, the International Actuarial Association organizes a World Congress for actuaries. This takes place every 4 years, like the Olympic Games, like World Championships in football. And this year, the German Association will organize this World Congress, and quite sometimes we thought about, well, why did we apply to do that? Because it's quite a lot of work to host an event for over 2,000 people participating this week in Berlin. And I hope some of you will also be able to come to Germany and participate in the Congress. We will have an outstanding Congress program. Perhaps some of you have seen the call for papers that was sent out last summer. Perhaps some of you have already heard. We will have a very high-profile program with daily plenary sessions with people coming from IOPA, IIS, coming from the European Central Bank. We have a program with over 100 speakers coming from the actuarial community, talking about all parts of the actuarial work. Traditional parts like pricing, reserving, but also into big data. Actuarial data science will be there on professionalism topics, educational topics. You'll find the detailed Congress program on ica2018.org. And this is really my last slide. The registration is open, and in the middle you'll find the early bird fee, which will offer you the lowest amount for participation. This is still applicable until end of January, so if you're interested in coming to Germany, you should use the early bird fee and be there. And I hope I will meet some of you again over there in Berlin, and then we will be able to talk about your entry into the CERA program starting mid of March here in Germany. Here in Madrid, sorry. Thanks.
Hi, thank you very much for the introduction, Javier. And I'm going to pick up more or less where Henning left off, where he gave a very nice overview of what exactly the CERA course will contain. And I'm going to talk a little bit more about what it means to me in a day-to-day basis, and what I think the value is for actuaries and also for the companies who will hire CERA qualified professionals. So to give a little bit of background as to what I've been asked to talk about, and also why I've been asked to talk, just made this one quick slide. So I've been asked to discuss my experience as a CERA, my view on the value for what CERA means to the professionals, the qualification, and what the qualification will mean to companies who hire these CERA professionals. A little bit about myself. I'm from South Africa originally. I've been living in Spain for almost 2 years, about a year and a half, working for Milliman as a senior consultant. And prior to that, I was working in the Netherlands for 7 years. I studied through the Institute and Faculty of Actuaries based in the UK. And through them, I obtained the CERA qualification in 2013. So I have almost 5 years of experience as a CERA. And this is why I have been asked to talk to you today. So Henning also touched on this, but I think it's important to mention a little bit the context that we're all working in as actuaries. And we've seen in the past few years a big trend. We started off with TV, EEV, we still see a lot of these topics today. Moving over to MCV, from MCV we've got Solvency II, and now the next big thing coming up is IFRS 17. And all of these topics show an increasing importance of the role that an actuary plays inside a company. Okay, we can talk specifically about insurance companies and reinsurance companies for now, but also, as Henning said, the CERA qualification is talking about risk management at an enterprise level, and the focus is on concepts, so these concepts can easily be applied to other types of industries as well, not only the insurance industry and not only the financial industry. So we notice within many companies that there is an increased focus on risk management, alignment of different departments, where we're all starting to see that companies are reporting certain measures. They're reporting their embedded value, they're reporting their Solvency II figures, and we're starting to see that different departments have to work together more and more to be able to produce the numbers that companies have to report. So there's an increasing focus in these areas. So now I will move to the 3 areas that I've been asked to talk about, starting with my experience as a CERA professional. So CERA has given me the risk management basis that has allowed me to be involved in many of the risk management topics which have become increasingly important for actuaries in the last few years. So I've divided them into 3 main areas: the quantitative risk measures, the business development, how we can look at certain products within understanding what they will contribute from a quantitative perspective, and also looking at qualitative risk management, because many of the risks that insurance companies will be dealing with are not necessarily tangible and cannot be quantified very easily. So we need to think of other ways in which we can manage these risks. Within the quantitative risk measures, I've been involved in the development and some other support around the ORSA process, specifically the development of ORSA models. We noticed different approaches inside the market. Some people want a very integrated model to do everything more or less together and try and obtain the maximum amount of consistency. Other companies have very different processes involved and need to combine these processes in different ways. So in this case, the aggregation of risks, and particularly market risks and then underwriting risks, need to be combined. And that also has an impact on, for example, strategic asset allocation and in general asset and liability management, where you start looking at the interaction between your asset portfolio and your liabilities. And this can be in multiple areas. This can be in the measurement of your time value of options and guarantees. This can be in the calculation of your interest rate risk under Solvency II. In Spain, of course, we have special ALM rules where your assets backing can have an influence on the valuation of your reserves. So the ALM topic is a very interesting one to look at in general, and in particular when we start going forward and looking at IFRS 17, we also have to look at the assets which are sitting behind certain blocks of liabilities. Something else that my CERA has helped me with is the alignment, the risk alignment of pricing models. What we've seen with many companies, and maybe some of you can relate to this, is when companies are calculating the value of their new business that has been written throughout the year, they report a very nice number and everyone is very happy. And then the risk department goes and includes that in their solvency calculations, and then they say, oh, but this business is adding a lot of capital to, it's very capital intensive, we need to be careful about this, maybe we should restructure the products in some way. So we've done a lot of work to try and reduce these differences by introducing an element of the Solvency II process into the pricing process, so that we have better alignment between the different departments. Another important thing that we've been doing in this area is the optimization of capital. And this can be through either looking at your portfolio of products that you sell, or it can be the management of the assets which you're holding to be able to meet your liabilities. And it can also be other types of things. It can be risk transfer, whether you use reinsurance or whether you use some alternative form of risk management transfer. And all of these things can have an impact on the level of your SCR, the amount of capital that you need to continue writing business, and ultimately the solvency ratio that you will be reporting. Then in terms of business development, which links to the previous section, particularly around the pricing and the capital contribution of individual products. We've seen that we've started measuring the contribution of the new business towards the SCR, and we've looked at that on a standalone basis, which is interesting to know, but we've also looked at it if you add it to the already existing portfolio, because that, of course, is the most interesting criteria for an insurance company. Taking this a step further into new product development, you can take a look at how to design products in such a way that they use less capital in general, or they make the best use of the diversification available from the other risks which a company already has inside its portfolio. And another point which is related to this is the optimization of the reinsurance program, or also how you can go about, just in general, pricing of the reinsurance, either as a ceding party or from a reinsurance perspective, how you price the business that you accept from a ceding party. And this would be then quite similar to the pricing for a direct insurer, just with the reinsurance specifics taken into account. But the similarity is that you try and take the Solvency II aspect as an integral part of your pricing. So while there is a big focus on the quantitative risk management, there is also a big element which is the qualitative risk management. As actuarial processes are becoming more and more important for different companies, it's important to have a good level of control around them. And we notice that governance is becoming increasingly important for companies, and this will continue to do so as IFRS comes into the scope of insurance companies and reinsurance companies in the future. So what we've been doing in this field for the last couple of years, me personally, is the model validation. So setting up a framework to validate your models, to make sure that the information that you're using to calculate your different KPIs, and also the information that you're providing to senior management, is reliable enough that they can make good business decisions based on your input. So there will be two phases to this. The one is setting up the framework that you will do your validation in. So maybe you need to make sure that you meet all the criteria under Solvency II, and you need to make sure that you have enough checks and controls in place, that you don't have material errors in the numbers that you're reporting. And then there's also the validation of a particular model, where you go through each of these steps and confirm that the model is good enough to be used. And if there are any things which need to be improved, there is a process in place to be able to improve the models, to make sure that companies, or that the information that you're providing to the directors is good enough. This also links to process improvement in general. So the governance is something that we've just touched on, just so that the senior management is comfortable that there are enough controls in place, that it is reliable, the information. And we've also noticed in many companies that there is a strong reliance on Excel sheets to do many adjustments or to do certain steps in between various stages of the calculation. And the automation of the flow of information during the calculation process is something which is becoming increasingly interesting for companies to reduce the possibility of manual errors, and also to try and speed up the process during reporting periods. Under IFRS, there will also be fast close reporting, where the deadlines for reporting your values will be shorter. So the automation process is likely to become even more important as companies want to make sure that things can go as quickly and as automatically as possible when doing their reporting. And one other thing which I've been involved in is the PARP process, or the Product Approval and Review process. And this is a process that you can do when designing new types of products, to make sure that you go through all of the correct steps to make sure that the products are beneficial to the policyholder, that they add value to the company, that they meet the different regulatory steps that are in place. And we see a lot of work in the Insurance Distribution Directive and PRIPS also at the moment, which is becoming an increasingly important part for different types of products with a financial aspect. And it's also about the review process. So in general, you can also do some things which will just compare your products to your competitors to make sure that you understand your position in the market when you're producing a new type of product. So that is what CERA has given me a lot of access to, these types of work that I've been involved in, and personally I find this very interesting. So having had access to that has been a very good experience for me. So next up I will talk a little more in general about what I think the value for CERA to professionals is. And I see three main areas that CERA can help different professionals. It can help you in your career development. It will also, all of these are of course quite linked, but it can help you by giving you increased exposure within the company, and it can also increase your opportunities inside and outside of the industry that you're currently working in. From the career development perspective, there's been a lot of work in risk management, and risk management is continuing to evolve in all aspects of actuarial work. So by following the CERA qualification, I think a professional is staying at the cutting edge of the developments in the industry and places them very well to be involved in any sort of change process which is going to happen at companies, or to be able to understand very well the situation, the financial situation that a company is in. This may translate into more opportunities within your company, because if you're working actively in risk management, you'll notice that input from different departments is becoming increasingly important, and there needs to be more and more alignment between different departments. So if you're working in risk management, you will also talk to the marketing department, you'll talk to the actuarial department, you'll talk to the guys in charge of data, and you'll notice that a lot of the information for the company is being summarized in some of the work that you do. So you will become a sort of a hub of information, which will be quite interesting when you will have more opportunities to speak to different levels of management, to provide them with the information that they need, and to make sure that they understand everything which is happening in the risk management framework as it is changing. So either Solvency II or in the future IFRS, because I keep mentioning IFRS because it has many features in common with Solvency II. There are some differences, of course, and it is ultimately an accounting accounting exercise, but there are a lot of features which touch on risk management in IFRS. So we've more or less progressed now from career development into increased exposure, as we're noticing there's more and more interaction between different departments and more exposure to management and senior management. And along with the different controls and governance which is in place to make sure that there is more and more reliance on an actuary's or a CERA's work in the future, will give you more opportunities, and just speaking to more people will give you a larger network. Inside your company has been the focus, but of course speaking outside at different industry events could also be another way of increasing your exposure. All of this will probably lead to increased opportunities both within and without the industry. So as Henning mentioned, there are lots of applications for CERAs to work in, because the focus really as an enterprise risk management qualification is to look at a company holistically. So they have many different techniques for doing that, for the qualitative side and the quantitative side. And you just need to tweak the methods that you are taught to be catered specifically for the industry that you're working in. And that will give actuaries and CERAs the opportunity to work in a very large number of different industries. Some of the examples have already been mentioned. And so that's what I think the value to professionals will be. And the next slide I will talk about is what I think the value to companies will be, companies that hire CERA professionals specifically. So I see it as a term of a process, because it will, throughout time, there will be a larger and larger reliance on the work that CERAs provide. So one of the first things that will happen is companies will start to align and standardize the different metrics which are calculated by the different departments, and people will start reporting with the same goal in mind. So we're going to have an increased focus on IFRS to get the reported numbers out, and increasing focus on Solvency II and how to optimize your different Solvency II KPIs, or key performance indicators. So there will be more and more dialogue between the different departments. Ultimately, there will need to be some additional type of alignment, and I think the sooner we can get more alignment between the different departments, the smoother all of the change processes will be. And the next step will be improved governance and risk identification. So the improved governance comes from having stricter control over the different processes, and stricter control over the flow of information, and the checks which are in place. And the risk identification, there will be risks which are already well known and well documented to a company, which will, of course, under the Solvency II framework, you get a list of risks which you need to measure. But there are also risks which might be specific to your market, or risks which might be specific to your company, or if you're in a group, that might be specific to the group. And not all of them are necessarily inside of the Solvency II standard model. And maybe some of these, maybe some companies will have an internal model which tries to capture more of these risks, but some companies will just not. So by having increased dialogue and more communication between different departments, there will be more opportunities to see different types of risks, in particular operational risks which could occur, and this might lead to a phase where a company will be interested in optimizing its processes and increasing its automation to reduce the chance of these risks becoming realized. This improved governance and risk identification coming from the increased dialogue will lead probably to a more holistic view or holistic view is really the enterprise risk management view of the whole company, so that the company can understand its entire risk profile. And once a company understands its entire risk profile and they have the governance in place to trust the figures which are coming from this, they will have a very good basis for the information to be able to make business decisions going forward. And this is going to be very important information for the senior management to be able to run the company. Of course, senior management, moving on to the next one, so I'm saying one of the other advantages will be improved strategic information. One of the things that we will need to do is we will need to summarize the massive amount of calculations which actuaries and CERAs will need to perform. And we will need to summarize these into key figures which the senior management will understand and appreciate. And for this, we will probably need to define some new KPIs. There are some KPIs which are already well known from the Solvency II world, but under IFRS, we will probably need to create some new KPIs which will be able to provide the maximum amount of information with a few key figures for management to continue with. And there's different ways that you can do it. You will have some absolute values, the value of your company, for example, or your PVFP, or you can have some which will be defined more as a hurdle rate, whereas you can look at the economic value added of a certain product in combination with the amount of capital which is required to finance that business. And so then you can look at things which will be interpreted more as a hurdle rate or as a percentage to know what return you will require from a certain type of business. And you can use that to improve your pricing or your product management, and all of this information can be taken as a cycle to continuously improve and update the way that your company is creating products and creating value within itself. And with all of this, ultimately, there will be increased opportunities for companies to optimize their business model, understanding their business so much better, and to optimize their risk versus reward position. Ultimately, we can create for companies an efficient frontier with risk and reward on two different axes. Maybe it's your value or your solvency ratio divided by the amount of solvency capital that you have to require. And by understanding exactly what part of risk new business and new products contribute towards your business, you can write or aim to write a certain amount of business and change your risk budget in such a way that you can optimize the amount of risk that your company accepts to choose your position on an efficient frontier or your risk versus reward position within the limits that you have or you have chosen to set for yourself. So that's what I think the route will look like in the real value to companies, what it will look like in the next few years. And that is everything that I have to say today. So this is my final slide. If there are any questions, please feel free to ask me or Javier or Henning right now. Or otherwise, I will also be at the back for a little while, and you can come and ask me any questions that you have. Does anyone have any questions at this point? No? Then thank you very much for your time.